Mike Fairborn. Hey, looking forward to our discussion today. Really wanted to talk about a key indicator, I think, that could be of key interest to watch, like currently, like right now. We saw changes a couple of years ago in this indicator. Want to keep eyes on it. Want to talk about some additional indications or signals that we could also be looking for as a potential confirmatory indication to a possible change in market direction. So I look forward to going through that with you. Hey, I'm joined in the chat by a good friend, colleague of mine, Connie Hill. Great to have Connie here. Folks, any questions, comments you have, definitely throw those in the chat so we can address those for you. Hello to you, Brown Buffalo, as well as Will. Great to have you both on board. Folks, if you are new here for the first time, we do focus on markets and sectors, and we look at specific trends in sectors, giving us ideas. A lot of times those are fundamental indications, and we're looking at those sectors too, as to areas that we might look for potential stocks also trending higher in those stronger areas relative to those that are not as strong. So we definitely do kind of a big picture dive, starting with market sectors, and then ultimately taking a look at stocks as well. So with that, though, let's go ahead and jump into disclosures to get going. Information here is for general information purposes only. Should not be considered an individualized recommendation or personalized investment advice. The paper money software application is for education purposes only. Investing involves risk, including for some products more than your initial investment. Now, futures and futures options trading does involve substantial risk. It's not suitable for all investors. A quick note as well, as you can see below on some of the Schwab indications for futures too. Now, with this too, past performance is no guarantee of future results, and historical data should not be used when making investment decisions. Now, the STAX is not a tradable index. The STAX should not be used as an indicator or predictor of future client trading volume or financial performance for Schwab. That is one of the indicators that I did want to talk about today, so I did that specifically. All right, so with that, let's go ahead and get the show rolling here, folks. As you can see, we've talked about this a few different times. We talked about possible resistance here, which possibly now became support at the 5660 level. We talked about the 200-day moving average. Some of these big, notice for the longer term trends, we're actually using longer term sort of indications. This is a very long horizontal line matching with our longer term potential trend or possible change of trend. The 200 DMA, folks. Now that's not a short one, is it? 200 days. It's a very well-known one, and here we are kind of bouncing right at it. I also mentioned to you, there is this one up here. There was a gap up here, kind of some support there as well, just above it at 5,800. Just some areas to keep an eye on. There's really kind of a pocket of resistance or support right in here, and it will be very interesting to see what does unfold at that level. Okay, real quick note on this before we take a look at a specific indicator that's showing us some signs that I think some of you have seen before. Those of you that do come to this class frequently have seen it before. But here is, the NASDAQ 100 taking a bounce off the 200-day as well. So not immune to the 200-day, or perhaps, we bounced off it right there, but something quite similar with the NASDAQ 100 relative to the SPX. You got this bounce. We touched it for really, today and yesterday, and we also struggled kind of in this range here. Take a look at this. If I pull this straight through here, right there, a lot of support through there as well. So we have a secondary level of potential support. Was resistance previously. We did get above it. So just an interesting area that we want to take a look and see what other indicators are pointing out to us. Now, before I do go into the indicator, I just wanted to highlight, though, one last thing is it does relate to volume. And for volume, we have to take a look at the ES. We did a quick rundown on those futures disclosures here, but we just want to look at the chart specifically, highlight a couple of details. Now, with this, I want to go ahead and throw out here for you the money flow line. And the money flow line, which does, what traders look at this for is that it does tend to net out buyers plus volume or minus volume. And you can see how weak that actually really is. I mean, it's just a very slight bounce. We got a slight bounce in the market. I would say the market bounce is a little bit stronger actually here, a little bit stronger, up to the 200, but very weak. Notice over here with me, what could be helping factor into this right there? Look at our recovery, folks. Look at the volume on the recovery. Now, I don't know what you guys think. Right? You guys have some interesting thoughts. I've read them. I've read your notes in the chat. Love to see them too in the chat too. But when you see this, sometimes it can be indicative. Let me see if I can just kind of paint over this. Is kind of like something I talk about in my Tuesday class pretty frequently. Is it a bull flag? Is it a bear flag? Is it a price pattern that's known to be bullish, or a price pattern that's known to be bearish? If we look at volume down here, a net collective of volume with the money flow, right? On the up days, volume's lighter, and on the down days, volume's possibly heavier. We're seeing generally that pullback here, and that is a negative sign. Now, does that mean we're going to come back? No. There are other indicators I want to take a look at with you. Last one is right here. In fact, here is our market sector. You know what? Let's just go back. It's okay. What I'm going to do, we could pull it up here. I'm going to hit that one in just a second. But if I go with the ES, we do need volume, and that's why I'm using the S&P 500 E-mini futures. S&P, basically it's the S&P 500, because we have that volume aspect, right? We don't get volume on the S&P 500 index. Now, there is an ETF out there for the S&P 500 index you could look at too, but I'm just letting you know we're specifically looking at futures here for that reason. And we're watching and waiting and seeing what we might get here. What I did want to add in is the volume profile. So we could see volume at price. Volume at price. Oh, I double clicked on it. Let's do it again. There we go. Oh, I did have it up top. Okay, so let's click on this. I generally will I just went into my gear there, and I'll just look at the value area percent as maybe a 10. So we're just looking at the top volume as maybe around 10. Some interesting points that you'll note here. Around these volume nodes. Again, what this is doing is it does take all this volume here, and it tells us, hey, what prices is this volume coming in at? In other words, how much volume came in at this price? And we can come over here on a 1 year. Volume profile is often used on a 1 year. Much of that volume that you're seeing is right through there. So you say, okay, well, it wasn't too much, but what are some of the peaks? What are some of the values? And the peaks are what we're really looking for here. Let's go ahead and change the coloring. I'm just going to state that there's a peak right there. And notice there's a dip before you get to the next peak. When you see those peaks, and let's just draw a line through here to highlight it right there. That's a lot of volume, and there can be support or resistance depending upon where we're at relative to it. Now over here, the next level is maybe right through there. So there's your next support point. Here's another key support point right over here, right there. So I'm going to highlight this. Let's take it off. Let's go spike, spike, spike. That's possible. This might be actually, yeah, see that right there? That's actually, I think, getting closer to resistance, depending upon where we close at today. Let's take it about, 52 minutes or so left in the trading day. But if you come over here and take a look at this, that might be resistance because we're currently below it. But I would say resistance or support. These are clearly support, support. The thing I want you to note is look at the volume dip here. There's not a lot of volume in this range until you get to this area right there. If we begin to break below this point, there is an indication, according to volume profile, that we could slip fairly quickly. And I say fairly quickly because we just don't have the volume over here to support us. See that? There's no volume there. There's a lighter volume. And when that happens, prices can move quite quick, particularly around a major low. And so you break that, you could dip. And so keep a watch on that. I mean, these are some additional indications just as it stands for volume. Okay. Hello to you, Ray. Others that are joining us, Kevin, Beth, Jay Richardson, Wrong. Great to have you on board. We've got Apex Thea, Junior Salazar, and Bush Bob and Will. Great to have you all on board. Now, just doing a recap on volume. Let's do this as well. We're going to jump right into that indicator that I mentioned earlier because you are seeing signs here, and we're saying, hey, what happens if it does turn down? Well, the indicator, and those of you that have attended this class frequently are pretty well aware of the Hindenburg Omen. I'm going to share the code so you guys have it, but it's right there. And it looks to net out 52-week highs. Let's try that again. 52-week highs versus 52-week new lows. And if you get a fair number of lows, I'll put an H over here for highs and lows. If you get a fair number of lows that are also there with highs, it represents kind of a potential fracturing of the market and can result in a chasm where you start to see a larger number of companies hit new lows. And what do 52-week new lows mean? Folks, it means this: extended downward trends and maybe an acceleration of that downward trend. When that occurs, we get the omen spikes down below that shoot on up. Now, we've said that these are maybe not as common on a daily chart, but when we go to a weekly chart, they become very, very interesting and potentially a lot more relevant, at least in terms of the way traders use them. Notice you began to make a lower low and lower high here. Do we have that over here? We absolutely do. In fact, there's our support break right there. There's a break. We broke below those lows. Now, did we bounce? We did bounce. Did we bounce over here? Yeah, there was a bounce here. There was a bounce here, but we still broke. Now, notice over here, as we were approaching this range, we began to get some of these spikes, and that is where we're really watching carefully. It's when that trend begins to make a lower high, because we've already made the lower low. This is a lower high. That's what we've been looking at more minutely on the daily chart. But that's the question. Will it be a lower high? Will it be a bear flag type of a bounce? Let's line these up a little bit better so you can see it. In fact, I'm just going to go right over here, use the Thinkorswim drawing tools to highlight this. In fact, let's just use a, let's see. Well, we can just use this. We don't need a tool. We can just use our crosshair. So there's a spike through here, here, and there. Okay. Do we begin to get, look over here with me. Do you see these spikes coming up right over through here? Do the lows occur here or do they not? Because a lot of times if you can get the lows hitting right here off of the flag, and it might not be ready yet. We don't know if this is going to be the flag. It could dip one more time and then do another flag. Exactly what happened over here. Notice over here, we dipped, we spiked back up. There were no Hindenburg omen spikes right there. We dipped again, and then they started occurring. So what we're really looking for here are more indications of those 52-week new lows occurring as we flag. Now, it might not be this one. We could dip again, and that's referred to as not a breakout, but a fake out. A fake out. So what if we come over here and do it one more time, and then we get those omens? We've got to keep an eye out for this. It could be very, very interesting right now. We've been waiting for a long time. In fact, we've been talking about this since, well, all the way over here. These omen spikes, like we get one over here, and it just failed. You know, prices, in other words, the trend turned up. That's the question. So now the big question is, we're going to come back here and look at that flag pattern and see what else is out there that we can keep eyes on now for indications of the possibility of the flag pattern rolling over into a flag. Before I do that, I want to go back to this time frame so we can just kind of see, because a lot of times markets don't play out exactly the same way, but they do sort of rhyme in a way. I think 4 years would do it just fine. Right over here. This is where we began to go down in 2022. And this is exactly the flag pattern right here we were looking at. And they can kind of run. Notice there was a little bit of a weak move here. There was no Hindenburg omen spikes here. Maybe one over here. They all came right through here. So in other words, as you were seeing a big move up, we began to get a breakdown. Ultimately, it was a setup for breakdown coming lower. So look how long this one took to form, even when it was starting to break down. This is first of the year, so this is Jan, and we didn't even break down until really sort of the end of March, which is, by the way, where we're at right now. We're at the end of March right now. Let's just compare that Jan and March right now and just see where we are currently too. But just kind of a side note, it did drag for a little bit. So scooting out over here, where's our January? It's more of a bottom, but there's a top right here. The end of March would be over here. We'll see. Okay, so some of the signs we could look for now, whether it's the bigger pullback or not, whether it is a pullback at all, whether it comes down here and bounces up again, or if it's just a longer pullback, remains to be seen. But regardless, those are still interesting moves, and we may not want to be, if that was our indication, if that was our expectation from whatever indicators you're looking at, I'm going to throw out some for sure here right now. But if that was the case, you probably want to be very, very careful what you'd be looking to go long in the market, because we all know what that's like, right? It's like bicycling into the wind. It's like 2 or 3 times harder, right, to get where you're going when the wind is really facing you. In fact, it's very, very difficult to get anywhere. In the market's the same way. For bullish moves, if the market's coming down, it could weigh on you because, yeah, it's weighing on 500, well, on a collective of 500 companies here. So that's something that you just need to be mindful of too. Let's get on down here back to our daily, and let's talk about some of those. Now, right now we are getting some weakness. If we're trying to decipher this in terms of a bear flag, some of the things that we could be looking at is, first of all, are we closing below the low of the high bar? It looks like we probably will today. We can't say that yet. There's about 45 minutes left in the trading day, but it appears we're going to close below the low of the high bar. Let's really zoom into this so we can really all see it better. Okay, so there's yesterday's high. Are we closing below that? Yes. Early indication. Next indication, are we engulfing the range? In fact, we're actually closing below, but we opened a little bit lower, but you'll notice we are engulfing this prior bar. That should tip us off, I should say, tip us off to an indication of another candlestick, really a confluence of candlesticks, and that's referred to as what? You guys remember that? It's the evening star pattern, right? You get the move up, you get kind of the doji, and then you get the follow through down. And now these are noted for being bearish. The market's not closed yet, so we don't know for sure. But price-wise, we're seeing some indications there of an evening star. It's right there. We're looking at it. Okay, let's zoom on back out, and let's just do this now. The next thing I wanted to hit, and I've got a few of these to run through with you, but we want to look at right here, the RSI. Now, if the RSI is less than 50, less than 50, if it's less than 50, that's a problem. For some traders, they just say, hey, they look at it like this is more bullish up top. This is where the bulls are. Bears are down here, and we are coming down right now. So it does show bearish as we're talking about it currently. Price-wise, it looks as though the RSI is already breaking a downward sloping trend line. The RSI can be a little bit more sensitive to price action than prices themselves. Notice over here, we haven't broken a downward sloping trend line yet. This is another indication that the trend that was formed here is possibly changing as we're looking at it, okay? All right, another one is the MACD. When you get a longer-term MACD crossover, I'm just going to use the 2-line MACD. Let's scoot on over and take a look at it right over here. Okay, fine. Let's make it a little bit bigger here on the value line, the main line, which is really the convergence, the divergence of both the 12 and the 26. These are the default levels. Exponential moving average. And then you get your 9 moving average on top of it right there. Now, notice we're showing some bullishness, a little bit of flattening out of the value line right here. One of the areas that a lot of traders will look for with this default, which is what you're going to get, is really when the 9-period moving average begins to break lower. Let me highlight it right there. When it starts to go below the value line. In other words, there started to become a divergence between those two moving averages. So it's an interesting signal amplifier. We actually got that, it looks like, after a couple of days down, right there, and a pretty sharp dip. That's the range. Next one, right up top here. This was actually technically the break right there. Happened a bit early, but this still nonetheless was very choppy. And again, might not have been a great time to have been participating in the markets, on a bullish type of approach, from a bullish approach. Now let's go back over here to a 1-year daily chart. You're going to see some of these. Once you start to see it, it can be interesting, but it's just like a signal amplifier. Say, hey, something is changing here. I'm going to highlight a few of these, and there you go. We don't have that yet. And so far, that's still a positive, but we'll see if we get it, what does happen. That's just another indication to look at. RSI, not a positive, but you can see it over here. Over on the far left-hand side of the screen, you got one more over here. These are still really difficult times and somewhat treacherous at times to try to be bullish in the market. That's where a lot of times, traders that are in this run over here. What happens, folks? What happens? They're in this move. They're doing well. They're gaining profit. They're profitable on a fair number of trades, possibly in the S&P 500. But when this happens, they might tend to give it back. And that's the whole idea, is to avoid those moves, especially if that matches your time frame, right? If you're along the swing trade time frame, which I think a lot of people are. Something to consider there. Okay. Next up, what do we have? We looked at last week, we talked about a longer term moving average that can be really, really effective. It's on the monthly chart. Historically, we said it has shown a tendency to be effective, and that would have been the simple period moving average for a 13 that historically has called a fair number of bear markets and bull markets. So it's long-term in nature. Were you guys, anybody watching this last week as we talked about it? It's an interesting one because we did bounce off it. And by the way, you can see over here too. It wasn't the first time we actually bounced off. We bounced off it right there as well. And we actually held a support level. And interesting. I mean, could we get support? We're already above it. So technically we got support. All else equal, right now as we look at it, it's a positive. But the key thing is what happens after. Notice this bar right there? Pretty obvious what happened on that bar. It was a sharp move to the upside. Will we get something like that again? That's the question. It could spike. We're going to look at seasonality here in just a bit, but we could spike and continue with this trend. But that is that 2022, fairly large pullback that would have been much better to avoid if possible. And of course, you broke through it right there. So you did close below it, and then the rest was, I'm not going to say history, but it did pull back for, these are months. So it did pull back 1, 2, 3, 4, 5, 6, 7 months. That's a long pullback. I mean, if you think about 7 months, majority of the year, of a year, I should say, and then it did bounce back up before we consolidated. And from that point on, it went up several months over here. So that's the question. What happens there? All right, it's holding it, but that's a good reference a little bit longer term. But we're not done looking at moving averages. In fact, one of the moving averages that can be used, I would say, on a little bit shorter term scale is right over here. Let's pull it up. Simple moving average of, when we use in the swing trade class for indications of a bull flag relative to a bear flag is the 10, which is really like a 2-week moving average, right? Because these are days. So it's over a 2-week period of time. Let's get that's okay. Except some colors here. There we go. Boom, boom. Okay. So potentially breaking back below that moving average could be of interest there. Notice that matches a historical. So you got the long term plus short term if it takes out that level. And then a lot of traders will say it's not it's not bullish until you get back up above it. Case in point, we're just looking right over here. When you broke below that, sometimes you tend to stay below. And that would have been actually a fairly nice one to avoid in the markets just by using that simple, that's short term, but it's the simple 10-day moving average. You guys find this helpful? It's something that I think is important to keep an eye on, these moving averages, along with these sort of, estimating and indicating possibility of these bear flags in the form of the larger context, which we started with originally, right? So, yep, if you found this helpful, useful, folks, do me a favor, smash that like button, give it a hit. Lets me know that you guys are finding this, useful and something you can keep an eye on. Help you get a better understanding of potential direction of the markets. And addition, smash that subscribe button too. So easy to do. And as Ben Watson likes to always say, it's free. I always thought that was funny. It's free to do. It is free. There are no charges to subscribe. Okay. Long-term, short-term, any other indicators? Yeah, that's just an indication of a few out there. Now, we didn't even do any exploration of the NASDAQ. The NASDAQ similar. Everything we just talked about, keep an eye on as well. The NASDAQ 100, that is, specifically. So the 100 would be one to look at. The Russell, which does tend to lead, a lot of times the small caps lead to the upside. It leads to the downside. Take a look at this. Lower low and lower high. Of all the indicators, is there one that's that clear? I mean, excuse me, of all the market indices, is there one that's that clear? No, I think that's the clearest one of all. And you could get an early sign here. In fact, we are on our second day down now on the rut right there. The small caps do tend to be a little bit more liquid, no doubt about it. And you can see right there, we're literally right on that 10 period. This was, in fact, last go around, folks, any way we want to slice it or dice it, look at this. This was, in fact, a bear flag. Let's do something fun here. Not that the other stuff isn't fun, but let's have a little fun with the prices. Many of you, like myself, are probably very similar, or are probably familiar with looking at the minus rut, or excuse me, they're putting the minus sign in there. If we flip the rut right on its head, right upside down, doesn't that look like a really good trend to the upside? I mean, generally speaking, it's a higher high, it's a higher low right there. Higher high, higher low, looks like a bull flag, perhaps, right there. The problem is it's upside down. And that's what you get with the minus sign in front. But it's a good way to kind of just check, your bearings a little bit and say, what does this really look like? Am I seeing what I think I'm seeing? Am I seeing the possibility of actual weakness here? Well, yes, we are. That's what you see. Now, that's the actual rut. So you can see this as a really actually a decent looking, just like it was a good uptrend, it's also a really fairly good looking downtrend too. And it's already flagged one time. Okay, and that trend's there. Looking at it just a little bit longer, you can see possibility of, that's a very large measured move if that's the case. But if you take this out and there's some support possibly at around a big number right there at 2,000. If that flag's lower, and if this is a flag pattern, using this as a guide, I'm just kind of estimating it. Yeah, I mean, that's a bigger dip. I don't know if that will happen, but we're saying that, the rut can be actually a leader of price. It has been in many, many cases, upside and downside. Remember the 2022 dip that we saw run all the way over through here for the markets? The Russell was there before actually the middle of the year. It had actually dipped, and it started in 2021 as an early type of an indication, and that is small caps showing more weakness. Small caps are tricky because small caps, they have less cash. The companies themselves have less cash. They're more vulnerable to market conditions. If something in the economy weakens, well, they don't necessarily have the cash to make it through a difficult time. And, a small fish becomes smaller, and a lot of times the small fish get eaten by the big fish. And in this class, we tend to focus a lot on, the bigger fish in the S&P 500. But as a side note, it can be a leading indicator. So keep that in mind. Now, before we dive into a couple of additional details, I did want to take a look at our sector grid and just look at general sector strength. I'm going to actually detach this guy and make it just a wee bit bigger here for us. There we go. Yeah, just get that top off there. Okay, cool. So there you go. And in looking at this, so you see a couple of different things. Now, I'm seeing, and we saw this last week. You guys, I'm sure, seeing the same thing with me. Upper left-hand corner, energy. We're taking it out right there. I'll use yellow here. But there's a high. And we could get a rally in energy. And that could be positive for a number of energy stocks, because when they get the black gold out of the ground, okay, when that happens, they might just get more revenues from that too. And that's interesting, because that's really an area that you might want to be watching for the possibility of a breakout or strength. Now, gold itself has been strong. We've been breaking out in gold, and that could benefit some areas in the materials sector, but maybe not all of them. Maybe not all. There's just a few of those areas like gold and silver that have been doing actually pretty well. I'll show you a gold chart here in just a second. A little bit of a bounce down here, but folks, this is starting to be, if it doesn't bounce up here, this shows a little bit of weakness, but I will say healthcare really holding into kind of a longer term flag pattern. And really where the weakness is coming, where we've seen strength for so long, is really in these areas right here. Communication services, and will that be a bear flag or not? That's what we're looking at. Looks a lot like the market. Look over here with utilities. Real estate looks a little shaky too. And that's, the S&P 500, the collection of all these sectors, looks similar to communication services and technology. Big weightings in those groups for sure as we look at it. So keep that in mind. Let's do this. Let's look at materials here. I want to take a look at gold. In fact, if I come over here, we can just go into gold, and I will show you that gold is still kind of breaking out and looking a little bit like a bull flag pattern. As you can see, we talked about this a couple of weeks ago as being a possible flag pattern, and it ended up flagging higher. Do we have a mini sort of a flag pattern here inside of maybe a longer term flag pattern? Well, that's the question, right? That's the question. But it's a really, really mild pullback here, and prices seem to be holding. There might also be some support here, and that could benefit some of the gold miner stocks out there. Let me throw out a couple of gold miners that are actually maybe just breaking above resistance. NEM is one of those right here. We actually have we don't know if we're going to get stopped out on here or not. This is a trade in our swing trade class, but you can see a little bit of a flag pattern here. It's down today, but will it break up and go higher is the question into a flag. Notice I've got my price projections over here. Another one, we'll take a look at gold. Gold broke above there. It's high, could extend higher. We don't know. There are some that are just leading with gold, and that's like AEM, which still has, if it reaches a flag pattern projection, could still have, just using this price to this price, it could still have some room to go. That's the question, but that is that area. Now, of course, we talked about energy, and you can look at some of the energy companies. Is that a reversal off ExxonMobil? What's another one? EXE, I think. Expand Energy. Some of these are just taking out highs right now. So generally bullishness, just as the sector chart had shown. Okay, so hopefully that gives you some ideas on maybe where to look in the upcoming week for strength. Possible bull flag within gold itself. Silver's looking interesting too. There's silver miners you could look at, as well as energy stocks in general. Okay, now market and sector review. I'm going to go through some of this. We did mention that there was a McClellan oscillator indication going above the minus 70, so a 2 to 3 week move. Okay, we got a bounce, so that unfolded there, but that happened all the way over here. We've actually got to the end of this week would be at least meet the 2 week time frame. Let's see if we get that or not. I will say that the advanced decline line is holding up fairly well right now. If it begins to break lower here, remember the Hindenburg-Omen, advancers and decliners? That's on the NYSE, but if this breaks lower, there could be a high chance that you might be getting 52-week new lows, and that could help to push this into a bear flag kind of a setup. The equal weight, much like the market, but it's got a little bit of a longer downturn trend right here. Lower lows, folks, and lower highs. Very similar on the equal weight. We looked at the Omen spikes, and by the way, I wanted to just pull this guy up right here and share this with you if you don't already have it. Okay. Don't know who built this, but I know it wasn't me. But that is the Hindenburg Omen. Now, a quick note on anytime I'm sharing, this is really a script. It's really an indicator script, but it is something that was created. And those are not guaranteed for timeliness or accuracy. So I'll just put that in the chat real quick. Accuracy, think scripts, accuracy. Think scripts. Oh, okay. It says, oh, maybe it was built by Prior Coach. Cool. It's a very interesting one, but I just wanted to put that note out there, folks, for you. And I shared it already. Okay. Very good. Now, I can put that Hindenburg Omen as well. I can list that. What I'll do is I'll put it in the description section down below for those of you joining this or viewing this in the archives. Okay, so it'll be in the description section of YouTube, so you can check it out. All right. So our lows, we didn't have any new highs in the market, so we don't have a huge standing on this, but we're actually really quite low. We're only getting 45 new highs in the NYSE, which is a basket of about 2.7 thousand or hundred, I should say, 2.700 stocks. So only 45 of them are hitting 52-week new highs a year, 50 annual highs. That's a low number. We're really looking for it to exceed that 250 level if the market, if the NYSE breaks into a new high. We're a long ways away from it, but that could help the uptrend to continue. These are interesting indications if that unfolds. Okay, so I wanted to point this out because we did have a historical dip using a 10-year seasonal chart. So this is the average, the red line AVG of those 10 years. That's the average of it, right? And you can see that we tend to make a low pretty much right where we're at, very close to it. And then we tend to bounce up through April, go sideways, and then rally up again. Now, that would be a great outcome for the bulls if we get this. But what that means is we might get, if that were to unfold, we get a reversal fairly quick here in the market to the upside and see the strength, which does historically break prior highs right there. So let's see if we can break above our highs here and get above there, if that does unfold. So that's a fun one to keep an eye on there. Again, seasonality, you can find that under style and then chart mode. We're normally on standard. Just go to seasonality, boom, right there, and you're good to go. Last but not least, folks, keeping an eye on the chart itself can be very, very helpful when you have more data. That's a 30-day, 30-minute chart. And you can see we did make a new high here, and there were some highs here, and these are higher, higher, higher lows still. So could we get a short-term reversal popping up here? Or, how does the S&P 500 react around key support? Key points to keep in mind. Folks, I hope you all found this useful and informative. The goal today was I did want to talk about the Hindenburg omen initially, which we did, and then look for clues and indications from other indicators on a shorter term time frame, just a daily chart as opposed to a weekly, for indications, signs that we might be flipping that into a bear flag relative to a recovery and a long-term continuation of the upward trend. Again, if you found it helpful, smash that like button. I'd really appreciate it, as well as the subscribe button too. But folks, it has been good being with you today, and look forward to future discussions. It'll be fun to see how this all unfolds, and we'll do that each and every week. So tune in. See you next time.